webinar, which we are now just getting into. And the other item is have a conversation with your accountant about services that will contribute to your business success. Food for thought on this, the 1st of July, the start of 2021. And obviously I'm your host. So three-way financial forecast assists businesses to succeed. The presenter today is Paul Barnaby, predictive accountant and representative of Plan Guru in Asia Pacific. Paul, I'm going to pass over to you now, thanks.
Thank you very much, Peter.
You can take it from there, thank you.
Okay, thank you. Okay, thanks very much, Peter. And by now you should be seeing my screen.
Yes, we can see that now.
Great. So my topic today is, do you need to know where your cash flow's heading? Have you had a downturn? Or in some cases, it might be an upturn. Talk to Zoom and ask them if they've had a downturn. I don't think so. So I'm going to say that we can find out in under 60 minutes where your cash flow is heading. Okay, so who am I? What am I? I'm a chartered accountant. I was for a good number of years managing partner of a traditional accounting firm in the second tier. And during that time, I developed what has become a passion for what I call predictive accounting, as Peter said. And predictive accounting in its barest form is nothing more or less more magical than historic accounting. Historic accounting records profit and loss balance sheet and the results in terms of cash for historic periods, or predictive accounting does it for future periods. All we're looking to is in the future what our financial statement's going to look like. Predictive accounting, however, goes a bit further than that. It includes financial analysis and strategic planning. So as Peter was alluding to in his resolution, find out how your accountant can help you contribute to your success. And that's what the predictive part about is all about. Obviously, that includes budgeting and forecasting. So I had my own consulting practice, styled beyond accounting technologies, but also, as Peter said, I'm the regional integration consultant for Asia Pacific for Plan Guru, which has a purpose-built tool for predictive accounting and reporting. So I've worked with, in recent years, many hundreds of business executives, but also CFOs and accountants. So never more in the last few months with the COVID-19 crisis has there been a bigger need for strategic plans and budgets. The need existed before, but there's a huge need for it now. And there's an old, pretty much hackneyed saying now, but it's just as true today as it was when it was first invented. If you fail to plan, you plan to fail. I am continually amazed by the number of quite large corporates that do not have formal strategic plans, let alone budgets. And particularly if you knew or know the impact of COVID-19 on your business, you can either avoid that impact or certainly manage it. But the important thing is that you are able to quantify it. Because you've probably already been through this, the various federal and state government packages that are out there may force you to quantify that impact, the very least of which will be the downturn in sales, in order to make application for that state or federal help. And in particular, if you're looking for those government-supported loans, you'll probably have to supply a complete business plan, including budgets in any event. And when I talk budgets, I don't just mean revenue and cost. You've got to have that full predictive statements, profit and loss balance sheet, and cash flow. So you need a budget. What are you going to do? Call your accountant? Well, hopefully. But in all likelihood, they won't have time. And in some cases, you'll find that your accountant is not even equipped to provide that sort of service. So what do? We reach for Excel, right? Wrong. Excel is a fantastic tool, but it was never built for budgeting purposes. It was built as an all-purpose calculation, formulas, you name it. You're probably familiar with cells and rows. The tool actually drives me mad, but it was, and sure it was built for accountants, but never purpose built just for budgeting. And if you'd like to get on the net and do a bit of research on a fellow called Ray Panko, he's a professor at the University of Hawaii, and he's published a number of research papers into Excel sheets, spreadsheets that themselves are publicly available. And here's the frightening statistic. He's found that 91% of them have got errors in them that the authors don't know about. I repeat, errors that the authors don't know are there. And in some cases, these can be quite material. I was talking to a Big Four firm recently, and one of their guys said, Paul, I know what you're talking about. We assessed a spreadsheet recently that was supporting an investment proposition, and it had a $25 million error in it. 25 million, and it had been submitted for an investment appraisal. Get real. And here's the second point, Peter. Excel budgets take 10 times as long to prepare as they do in a purpose-built app.
Yeah.
So why would you buy it? Okay, so what are we going to do? Okay, well, this is where I can help. Firstly, I'd like to share with you and your viewers, Peter, what actually is contained in a successful budget. And as we've both alluded to, they must be three-way. They must be profit and loss, balance sheet, and associated cash flow. They must start with known data, in other words, historic results, unless it's a new startup and you haven't got those results. But here's the big one. They must be what's called driver-based. When I first learnt budgeting, I was told, take last year's numbers, add or subtract a bit for next year, and that's your budget. Not so. A good guess might be better. What you've got to look at is what drives the business. Is it the number of transactions at an average transaction value? Is it the length of time your customers take to pay you? Because that affects your cash flow. Is it the investment you've got in inventory or R&D? Is it your wage base, your salaries and wages? These are all what's called drivers, and you must take them into account almost on a line-by-line basis as you prepare your three-way budgets. The data must include budget, actual, and forecast, because they are three different things. Budget is your estimate of the year to come. Actual is obvious, that is the actual that comes through your accounting system. And forecast is a combination of the two, plus any update to give you a rolling attainment likely for the current year. Obviously, you must be able to report budget against actual, because what we're talking about here is not accounting so much as a process, and that process is strategizing. So if we compare budget with actual, work out how good our budget was or bad, we can work out, was the strategy wrong, or did we just get an indifferent result that month or particular month? And other reporting out of any budgeting must be flexible and obviously user configurable. Okay, so what I'm going to look at today is a really interesting case study, which is I've prepared since COVID-19 crisis came on us. We know their results to the end of March, and in particular, we know a number of statistics on restaurant meals and takeaways. It's a real case. It's in suburban Brisbane, but reasonably inner city. And we know details of their food and labour costs. They do qualify for JobKeeper and cash flow assistance, so I've taken that into account in the model that I've prepared. But they have an existing ATO debt. What happened was they used to be open 3 services a day, breakfast, lunch and dinner. About a year ago, they decided they would remain shut after lunch and not open for dinner and just see how it went. Well, it didn't go terribly well. They managed to stay profitable, but barely. But as a result, their cash flow wasn't that flash, and they built up a debt to the ATO, and we'll be looking at those numbers in a minute. They also, to deal with that indifferent cash flow result, had to resort to a bank overdraft. So what we looked at was the possible strategies. And what I might share with you first is the numbers, and then I'll come back and look at those strategies. So let's have a look at their actual results to the end of March. And what I've got here is I'm showing you a sheet out of Plan Guru, which is the tool that I use. And it's just a month by month typical revenue, cost of sales, operating expenses statement, P&L going down to income from operations, other income and expense, and then down to the net income. So if we have a look at the top, you can see they're doing around 40,000 a month. It dropped a bit in December and January because they were shut for the part of the holidays, but then it came up to around 41, 44 in March it was. Reasonable gross profit, expected margin is okay. They had 4 full-time staff, 2 owner-operators, a full-time chef and a full-time front of house, and you can see their wage expense obviously is a significant item in their P&L. So there's their operating profit there. You can see it's a bit up and down, and after other income and expense, you can see they only made $10,000 profit for the whole period from July 1 through to the end of March, pretty marginal. If we have a look at the balance sheet, you can see that their cash result here varied, and here's the cash result varies starting in July at -27. They managed to get the overdraft down to just under 10,000 at the end of March. However, at the end of March, they also had a debt to the ATO just under 30,000. You can see it's built up there with PAYG and GST and some historic debt there as well. And if we have a look at the cash flow, here's the cash flow report. Don't get too mystified by this. All this is saying is here's the revenue that we had, here's the expenses we had, here's the various changes in any balances in the balance sheet that affected cash flow. So here is our operating cash result for each month, and you can see July was -9, then +10, there's a few other negatives. Then we look at any cash provided by investment activities. There was a couple of changes there, and then we look at financing, and so we get a net increase in cash for the month, pick up the cash at the beginning of the period, so that's that 99 that was showing in the balance sheet. So if we have a look back now to the income statement and go to the budget, let's have a look what we decided to budget on. So come April, the restaurant's closed. They do have a couple of items of revenue. One is obviously takeaways, and I talked about drivers. I've handled the drivers here in this non-financial data page. And it's really not as difficult as it looks. All it's saying is we're open for 30 days in the month. For takeaways, we're predicting that there'll be 90 takeaways each day at an average value of $10. So 900 per day for 30 days in the month is 27,000 food sales for the month. They also thought outside the square a bit, and they're not far from Brisbane markets, and got a good relationship with a fruit and vegetable wholesaler there. They were selling, or are still selling, fruit and vegetable baskets out the front of the restaurant, and they're budgeting $200 a month, and they get a commission of $8 a basket or box, so $1,600 revenue from that. Then what I also did in the budget is they, going back to those strategies now, let's have a quick look at that. They released their casual staff, and they put the 4 full-timers on job keeper, and they then started thinking about what would happen when the restrictions eased. They made no plans for any easing of restrictions for April, May and June, which is what the budget reflects. However, there has been, as we all know, some easing of restrictions with numbers of 10, and I think currently it's 20 in the restaurant. They obviously had to plan for an ATO debt reduction and getting back to a cash surplus. So how did we do that? Let's go back and have a look again at that budget. With the $27,000 worth of takeaway sales, here's their profit for April, May and June. 19,000 gross profit, expenses of around 18,000. So you can see at the bottom here, before the assistance, we've got just a small profit of 791. In June, there was a power bill paid, I think, and that took us into a small loss, so break even. But coming down into other income here, firstly, we've got the job subsidy for JobKeeper. So that's $13,000 in both May and June. And we've also got the cash flow assistance of $7,284. So that's translated that profit up to $21,000 for May and $10,000 for June. And if we have a look at the cash flow for May and June, you can see here that in April we started with, I'll just scroll down a bit further so we can all see that. We started with negative cash, 10,000, you remember. That dropped to 4,600 in April. Then we were predicting that to go up to 30,000 positive in May and $46,000 positive in June, only because of that assistance, which you can see is reflected in the cash flow as well. So let's just have a look at that in a report format, just to make it a little bit clearer. If we look at the income down here, before assistance, April, May and June, negative, nearly 5, nearly 8. After assistance, 800, 21,000 at 10.5. And in terms of the cash flow before assistance, -6, -3, -3, -4, positive 30, positive 46. Huge, big difference. But again, pretty much taken care of by that government assistance. Okay, so I'll just stop there if there's any questions, Peter. But I'll have time for questions at the end. Has anybody got any questions? I can handle those now. Otherwise, we'll move on. Okay.
Sorry, I was off air then.
That's okay.
I haven't got any questions here yet, but obviously what you're showing people here is that they can do some what-if type calculations, can't they? They could increase the takeaway food to $11 if they wanted to, or change the number up to $100 and get the result virtually instantaneously.
Exactly. That's exactly what I'm about to do.
Oh, okay, righto. Okay.
Because what I'm going to do now is to say, well, what do we think is going to happen July, August, September? What if we got X number of transactions in the restaurant? So again, I've left April, May, and June just on the takeaways, but clearly we could affect that period. But what I'm going to do is to have a look at a build-up from 1 July. Right. So they're ready to open today, effectively. So I'm going to say that from today, we might be able to do 30 transactions in the restaurant. Then we might get that up next month to 50. And then we might get that up to 80 from September on. So if we did that, and I'll just make sure that goes through, you can already see that my revenue is up to 38,000. And that will immediately, I do that in this non-financial calculation area, that will immediately translate through to the 2021 budget. There's the 38,000 coming in there automatically. If I adjusted that back here and said, no, I think we could do better than that. Let's say we could get actually up to 90. What if we got it to 90 and it carried on? There it goes up to 43,000. I've already got the takeaways in here. So the daily transactions, no, I haven't got. Let's make those come down a bit. We were doing 90. Let's take those down to 60 and then to 40 and then to 30. So we've got 52,000 and we'll make that carry on as well. Now, the great thing about using a tool like Plan Guru is I've just made a few changes there on the number of restaurant meals we're going to do and the number of takeaways. That has already updated the income statement. So my income statement is already updated. Automatically, the cost of sales has been adjusted. And Plan Guru has even looked at the labour cost and said, what labour cost will we need? So what it's said is in July and August, we're happy with those full-timers, but then it's measured by percentage terms as the food sales increase, what extra staff we need, and that's been calculated back in this non-financial data page. And you can see here that it's saying wage cost casual needed is 5,271 because it's measured the labour cost at 35% at 18,000, deducted off the full-timers, and then said we will need 5,200 in casual wages. Again, come back to that profit and loss statement, and you can see now that we are making a profit before assistance of 2,600, 2,400, 7,500 in July, August, and September. And after assistance, you can see there 25,000, or goes up to 15,000 in July, 25,000 and 20,000. And then in the balance sheet, I've actually allowed already for this ATO liability to be reduced, and we're paying in July, we're paying 12,700. We've paid down 52,000 in August, so we've basically got rid of the debt. It's actually gone into negative slightly. I could probably change those payments to the ATO slightly. And again, this is how quickly you can do it. So let's say I took that down to 8,000 and click OK, the payment in September. That's immediately updated that. So you can see that it's changed the ATO debt. So very quick changes all the way along the line. I think I got that wrong. Let's have a look. Payments to ATO. Take that off. I made it. Should have been minus 8,000. Correct that. There we go. So with 8,000 there, we actually get it down to 2,600 in September, and then it grows a bit because I haven't allowed any payments after that. So that's the nature of it, Peter. You can see how quick it is.
Yep.
This whole case study took me about 45 minutes to prepare from scratch, importing the data from the historic data, and then looking at the what ifs, but in particular, those calculations in the non-financial page.
Yes, so thank you, Paul. So today we're targeting small businesses and medium-sized enterprises. So if any of those people who are watching this video want to contact you, they can do so, and you'll talk to them direct in their businesses?
Absolutely. I'm more than happy to do that. We've already looked at the budget. So again, thank you from me for your attendees and or watchers of the recorded video today. So thank you very much for attending. If you'd like to talk to me, there's my email address, paul@beyondaccountingtechnologies.com, and there's my phone number or my mobile, 0411 21 4471. Give us a call, no cost or obligation. Happy to chat and give you a free appraisal of what you're doing now.
Okay, well, thank you very much, Paul. We haven't got any other questions at this stage. Obviously, if people send me questions towards the when we finish the second part of this webinar today, I will send them on to you. I know you've got another commitment, so thank you very much, and we will talk to you again shortly.
Okay, thanks very much, Peter. Sorry I have to run, but thanks very much.
Thank
you.
Catch
you later, Austin.
Okay.
Stop my share now.
Righto, thank you. Bye-bye. Okay, I now want to continue on with business advisory services contribute to business success. And I just want to go through this with you because there's been some discussion in some circles, accounting and others, as to what business advisory services really means. So I thought we would give small businesses and medium-sized enterprise operators the opportunity of hearing it from someone that's been an accountant for a long time and has worked in the accounting profession, where I was the senior partner of a well-established regional accounting firm. And but prior to then, I had 12 years in commerce, most of which was as the chief financial officer and company secretary of a listed public company. That was interesting. That company had been going for 50 years. Now I'm going back some years, but they'd never produced a budget and cash flow forecast, the sort of things that Paul was just talking about. I did the first one of those in a long time ago now, but that company had survived for 50 years, and you just can't do that anymore. Public companies learnt in the era I'm referring to that you had to have budgets and cash flow forecasts for your directors to have some idea of where the business was going. And obviously banks wanted it because businesses need some assurance that you're going to be able to get the money from your banks. Therefore, the bank needs some assurance as to where you're headed. So the budgets and cash flow forecasts that Paul talked about are very important. I think one of the key things that you're trying to achieve in the services is a closer working relationship with your accountant. I know at present, or up until probably beginning of February, most of you probably only saw your accountant a couple of times a year. You've probably seen them a lot more in the last 3 or 4 months than what you've ever seen them, or talked to them, or had videos with them. And I think this is the sort of relationship you should be having on an ongoing basis, because accountants can supply a lot more than taxation services. That's what they've tended to supply in Australia: a set of annual accounts, maybe a budget of sorts to your bank, and the preparation of your taxation returns. Why? Well, that's how the market's worked out. But today we've got a lot more technology available. There's a lot of very good software. There's other products. And accountants have been trained at university and in their post-university training that they have to undertake to become a member of the professional bodies. They've learned a lot of things besides taxation. So they can do a lot more work for you and your business. So let's explore some of that today. Let's look at the key business components of any business. First ones are products and services. Well, your accountant's not going to make your widgets or make your food to sell to your customers or pour you beer. But what your accountant can do is have a good close look at your business operations and determine whether you are receiving appropriate key performance indicators. And some of you may say, what are they? Because many small businesses are not conscious of the need for key performance indicators. So they're figures like the gross profit percentage based on the sales that are being made. It's the percentage of labour to turnover. It's the average sale figure. It's the percentage of downtime in a workshop. On their own, these figures don't mean much. But when they're being able to compare to your year-to-date figures, or what happened last week or last month, or to an industry benchmark profile on other businesses in your industry, they can really start to mean something. Teams. Your accountant's not going to employ your staff. I don't mean that. But today, there are all sorts of regulations with Fair Work Australia. If you had your accountant working for you on a full-time basis, in most businesses, the employment agreements would end up on the accountant's desk to be reviewed, filed, make sure everything has been undertaken that has to be undertaken. But in 2020-21, many of your team members are going to be receiving reports. They might be those key performance indicator reports. Do they really understand what they mean? Your accountant could help with some training and mentoring on what information those KPI reports are indicating. The leadership team. Now, this is a very important component of your business. And some of you may only have 1 or 2, others might have 10 people that are classified as leaders. I think your accountant can play a very important role here in giving them the skills to be able to read and understand the key performance indicator reports, and then to be able to make some suggestions back as to what could be included in the key performance indicator reports, but also to understand financial reports. There's nothing more distressing, I don't think, than sitting down to talk with a line manager in a business and ask him, is he been able to go through the report, which might have been on last week's trading activities, or it may have been the month's profit and loss account, or even the annual profit and loss account. And it's very obvious in the first 20 seconds of that conversation that that person does not understand what's on that piece of paper. And in fact, in many cases, I've found that the piece of paper is withdrawn from a sealed envelope. So the manager is not even bothered to open the envelope to extract the very important piece of information that's been sent to him or her. Why? Because they don't understand it. They know they don't understand it, so they don't bother reading it. Yet someone has worked very hard to produce that information. Your accountant can help in that interpretation, that understanding of what this information's all about, so that they can perform their job better. Determining strategy. Strategies are very important in every business, but most SMEs are going to need someone to act as the project manager for the development of strategies. Accountants are trained in this sort of work, and they're the ideal person to be acting as the scribe, if you like, writing down the strategies, obviously making some suggestions, and then putting it all back into a report format that you can review. And the biggest challenge most businesses have, whether they're large or very big, is implementing strategies. And that means that the strategies are documented and then action plans are put in place. Who's going to do what, by, when, and what's the feedback? Why not use your accountant to be getting that information back to you so that you can then be monitoring that information? And last but not least, in looking at this summary of business advisory services, is the funding for the business. And this is going to be a very crucial area throughout 2020-21, and I suspect into 21-22 as well. And that is where you're going to get the funding for your business. Banks are starting to feel a little bit worn out. They have lent a lot of money to small businesses and medium-sized enterprises. And I don't think they're going to be very keen to be looking to lend additional sums of money after the 30th of September. Your accountant can help you in that analysis. And in fact, I think that analysis should be happening this month in July, so that you could potentially take advantage of the coronavirus SME guarantee loans that are in operation at present, with money supplied by the Australian government and the Reserve Bank. It's been allocated to the banks to, in fact, on lend. And the government, the federal government, is guaranteeing 50% of that borrowing by SMEs. The banks obviously are bearing 50% of the commercial risk as well. But you also might find that you could be very interested in looking seriously at raising capital, utilising crowdsourced funding, equity raising. Let's look at some of the cash flow management that your accountant can assist you with. Debtors management. Unfortunately, I think this is also going to be a very problematic area for thousands of small businesses in the next 12 months. And that's because if there's a tightening of cash available in the system, businesses will stop making payments. They'll slow it down. So knowing what your debtors' days outstanding is now and monitoring it very closely each month and monitoring your debtors, contacting people, asking for payment, having a member of the leadership team go out, say good day, have a cup of tea or coffee, but also come back with a check, or at least the knowledge that while you were there, they transferred the money into your bank account. Inventory. There's going to be a temptation as business returns to normal to build up stock levels. Your accountant can help monitor that. And in particular, monitor that there's not problems in particular departments or on particular stock items that you start building up. Because the key for inventory management, as I'm sure you know, is to make sure there is ongoing turnover of that stock. It doesn't sit in your warehouse for 2 years because it's going to depreciate in value, probably be last season's fashion. No one will want to buy it. And it's costing warehousing space interest. And even though interest is at historical low rates, it's still costing money. Work in progress. Work in progress is something that affects the building industry, tradies, professional firms. It needs to be closely monitored and managed to make sure that jobs are regularly being invoiced so that you're not building up this huge cash investment in this asset that needs to be converted back into cash. As we go on in this new financial year, negotiations with creditors could become very important to try to negotiate extended payment terms. If your debtors start to blow out by 7 or even 14 days, and I hope they don't, but if they do, one group you could try to talk to is your suppliers, your creditors, to see whether they will agree to a similar relaxation on their policies. One of the problems you'll have is if a supplier is vital to your business, that's the only firm that you can secure your raw materials from. And they say that they're going to stick to their demand that they are paid strictly on a 30-day basis. You are going to have some real problems. And therefore, you should be talking to your accountant about what the alternative funding arrangements might be. And in the first instance, you would talk to your bank. Can your bank help you? However, I'm sending you a warning that I think it's going to be very difficult to deal with banks once we get past September 30. What about the business forecast? This is more work that your accountant can help you, because he could or she could run workshops to determine strategies to be included in the business plan, because that's where strategies end up need to be placed into a business plan. And then from the business plan, the budgets can be prepared, because the business plan is going to highlight what the business is going to do, what activities are going to be conducted, the locations of those activities. Therefore, the rent can be calculated, the projected income can be calculated. And if you're opening new stores or new premises, what is the capital cost to outfit those premises can also be determined. Although that's strictly not the budget, is it? That's the cash flow forecast, which is the next one that I've got. So basically, once the budgets are prepared, which is saying what the turnover is going to be, the cost of sales, labour, and the other overhead expenses, what's the bottom line, the profit or loss? And that can then be reflected into the cash flow forecast. But when you're looking at a cash flow forecast, your accountant's going to be very mindful of your debtors' days outstanding. If it's currently 45 days, but there's an expectation that it's going to blow out, that's got to be reflected in the cash flow forecast. And if you're undertaking major capital expenditure that I did start to refer to a moment ago, that needs to be factored into the costs of operation within the cash flow forecast, so that you can see what the extra cash requirement's going to be. And at the end of that process, the decision then needs to be made, well, where are we going to get that extra cash from? It might be $500,000 in your business. You could have a discussion with your friendly bank manager, but I'm doubtful whether you're going to get much joy, especially if you're talking to the bank manager after the 30th of September. And that might mean that cash flow needs to be seriously looked at to see whether you could use crowdsourced funding, equity raising to raise that capital, or Section 708. Go to the market and raise $500,000 to $600,000. The predictive balance sheets will enable you to have a bird's eye view of what your business might look like in, say, 3 years' time, if you've undertaken 3 years forecast and your accountant has plotted all the figures. And it gives you some satisfaction that you're headed in the right direction. Alternatively, of course, it might send out some real warning signals to you that things need to be changed. Let's look at some of the trading assistance that your accountant can give you. I find that many clients running retail operations really just pick some figures and look at what competitors are doing and have some specials and other pricing in their business with no real thought as to whether at the end of the day, based on the various product mixes, sales mixes, that the profit that's been calculated in the budget is going to be achieved. Well, your accountant can do some calculations and show you how that's going to work out. Because within your retail establishment, you've got different markups. You've got a product which might be very popular, but you're only able to get a 30% markup. Yet there's others you can get a 200% markup. It's great if we can sell 100% of the 200% markups, isn't it? But that's not the real world. And if you start selling too much of the very low markup products, well, you're not going to achieve your budget target for profitability unless you'd set it very low. So your accountant can help you doing those calculations. Another major area is tradies. They set charge out rates and also material markup rates. Do they have any bearing as to the amount that has been shown in the budget as to being the projected profitability? In many cases, no. So you can utilize a product, which we have, that enables an analysis to be conducted as to the individual employee. How many hours do they work? What is their expected productivity? What other duties do they do that they're not going to be able to produce income? What's the overheads costs? How much is the annual expenditure going to be in external materials? If we mark those materials up by 10%, what does that do to the effective charge out rates that have got to be made so that you will earn your budgeted profit? These types of calculations can be done and your accountant can do it for you. And the same type of approach applies to manufacturing businesses. They mightn't have the markup on materials like tradies can, but it's all relative in making sure that based on the number of work hours for your team members, your expected productivity, the overhead costs, the wage costs, of course, is that all going to generate the profitability that's been included in the budget? And then that type of calculation should be reviewed, revisited each month when the actual figures are available as to the productivity of the team and the production, so that a determination can be made as to whether you're on track. to achieve your target of profitability. It's a bit late turning around sometime after the 30th of June 2021 and saying, gee, we had a budget that we were going to earn $140,000. We've only earned $30,000. What could we have done differently? When in some cases it might only be some fine tuning during the year after each month. Your accountant can help you do that. And this is one of the vital roles that your accountant can play for you. And it's one of the main differences between having a full-time chief financial officer or accountant working in your business, because that's what you'd expect them to be doing, as compared to using an external accountant, tax agent to lodge your tax return. Now, with today's communication using Zoom and other means of communicating and the software products that are now available, these types of calculations and communications can be held, even though your accountant might live hundreds of miles or kilometers away from where you're operating your business. Communication can be held and you can look at it. There's some business monitoring that, if you look at the public company model, happens all the time there, monthly business review meeting. And I think your accountant should be the facilitator. In a public company, the chief financial officer invariably is the facilitator for the business review meeting, which includes production, sales, marketing, human resources, accounting, the CEO and other key executives in the business, sitting down, analyzing how the business has gone. Are you doing that? If not, why not? And if you're not, I think the person you need is your accountant acting as the facilitator or project manager for that work to be undertaken. For that process, there always needs to be an agenda. This is what we're going to discuss at this meeting, but it's got to be a bit free. It's not, you can't talk about something unless it's on the agenda, but try to working through the key issues. And after it, there should be reports written and produced, minutes prepared, and an action plan. That's probably the most important document. What are we going to do now out of all this to make it all come together? And the concentration in all this is not taxation. I really haven't mentioned that word for some minutes. There's a whole range of other issues that are generally called, in accountants' jargon, business advisory services that your accountant can perform to help add value. So we need some action because we're at the start of a new financial year that's going to be a tough year. Most of us have been through some pretty tough conditions in the last 4 months. And this is going to continue, I think, for most of 2020-21. So have a conversation with your accountant and redefine their role in your organization. They'll give you a proposal and a quotation. So I hope that helps you in your thinking as we look at the start of a new financial year. Let's have a look at the COVID-19 news update, because there's been quite a number of matters occurring. And unfortunately, we've got the situation that's emerged in Victoria, whereby the Victorian government's had to take some fairly draconian action to stop people moving around because the spread of the virus is occurring again. Just shows you we have to be very diligent. The coronavirus SME guarantee loans, which were made available with $90 billion from the Reserve Bank and $15 billion from the Australian government, are still available. In fact, there was an article in the Financial Review a couple of days ago which said the Reserve Bank boss is very upset that, or surprised, there hasn't been more loans issued under that heading. And any money out of that $105 billion that hasn't been allocated by the banks by 30 September has to be returned to the Reserve Bank. So why not talk to your accountant about preparing the documentation you're going to need, which will be a business plan, budget and cash flow forecast, looking at the next 3 years, because these loans are for working capital purposes and have to be repaid in 3 years' time. Did your turnover drop 30% in June? If it did, and you are not currently on JobKeeper, please talk to your accountant about getting you registered for JobKeeper, and you can start from now as long as you have got staff, and you will receive $1,500 per fortnight through until the end of September. There's obviously some real opportunities for those of you who can supply home builders and renovators, so tradies, builders, suppliers of various equipment and fixtures. There are opportunities there now because of the $25,000 grants that people building houses and doing renovations valued at over $150,000 can obtain. I've already alluded to this a couple of times, but the financial commentators are all predicting. I haven't read anyone that says there's going to be plenty of money available to borrow after the 30th of September. But there's a lot saying it's going to be very, very difficult to get finance after the 30th of September. So everyone needs to be looking at this now and talking to your accountants and getting the information prepared, getting them to undertake this broader role. One of the other interesting things is that according to the Shopping Centre Council of Australia, 80% of SME retailers who operate in the major malls in the major cities have all indicated that they're applying for rental relief. So they want a rent waiver or rent deferral. Now, to get that, they must have had a drop in turnover of 30% in either the months of March or April, May, or now June, when comparing 2020 with the same month in 2019, because you have to qualify for JobKeeper to be able to access the shopping centre relief. So if your business is in that category and you're not one of those 80% who have already started the action, you can do so if you wish. If you're not getting the JobKeeper wage payments because you don't wish to get them, please talk to your accountant to make sure the documentation is in place that proves you qualified for the JobKeeper scheme in any case. The Financial Review's had a couple of articles in the last week that indicate the banks are worried about 200,000 businesses that collectively owe them $60 billion. It's a lot of money. So this is also highlighting the frame of mind that your banker might be in from now on. And bankers have also commented that boards of medium-sized firms are starting to become more conscious on their duties to prevent companies trading whilst insolvent. You might remember that the federal government passed an amendment to the Corporations Act that basically means that no one, no bank, no other organisation can take wind-up action against any business until after the 30th of September because the government imposed a 6-month notice. But that legislation is scheduled to be withdrawn at the 30th of September. So it is going to place a lot more pressure on business operators that banks and other lenders could come looking for their money and could start to appoint liquidators. ESS Small Business is part of the ESS BIZTOOLS group. We are here to assist SMEs. We are here to demonstrate to you the services that accountants can provide. But we have in particular got a COVID-19 survival plan. We've got debtors management product packages. We can introduce you to accountants who can offer Chief Financial Officer services. So don't be put off. If your accountant says, no, I only want to do tax, because that's what I'm very good at. That's all right. You can go and get someone else to undertake the CFO role, and your accountant can still lodge your tax return if that's what you want to do. If you don't know who to go and talk to, you can send me an email, peter@essbiztools.com.au, and we will give you an introduction to an accountant somewhere in Australia, close to where you're operating from, who will be able to assist you. So please visit our website, www.esssmallbusiness.com.au, to get a full appreciation of the products which we've got. We've been operating these special webinars now for the last 11 weeks, and we're continuing through to the 30th of September. The next one is on Wednesday, the 8th of July at 12 noon AEST. You don't have to physically be here. We will send you the link to the presentation. Our presenters next week, though, are Andrew Geddes. Andrew is well known in accountancy industry and some SME circles. And for the last 9 years, he was the chairman of Green Cross Limited, a top 200 ASX company that 30 years ago started as a small veterinary practice in Townsville and grew to become a top 200 company on the Australian Stock Exchange. Andrew's going to talk about the challenges facing SMEs in the post-COVID-19 environment. There's going to be quite a number of them, and I think you will find what Andrew Geddes has got to say has been very interesting. The other presenter is Anna Gunther, who's the Managing Director of Pledge Me. Anna is a crowdsource funding intermediaries CEO, and she's going to talk about funding SMEs in 2020-21. I think crowdsource funding equity raising is going to be a very important activity for thousands of small businesses in this new financial year. Now, wherever everyone proceeds to actually raise money, time will tell, but people are going to be closely looking at it. And we've got full details and full packages with training videos and other support mechanisms to help you understand how crowdsource funding equity raising operates. Anna's company also operates in New Zealand, because New Zealand has had crowdsource funding equity raising for about 5 or 6 years longer than Australia. And she can talk about her New Zealand experience as well. I think you'll find next Wednesday a very worthwhile time for you to invest 1 hour to hear Andrew Geddes give you some insight as to what might happen in your businesses and how you might be able to make sure you're going to be able to survive. And Anna Gunther will be able to give you some understanding of how you can potentially raise the funding that you might need in your business through raising capital without having to borrow money, enter into personal guarantees, offer securities. So to register for that webinar, please go to esssmallbusiness.com.au/webinars. For more information, you can contact us. Go to www.esssmallbusiness.com.au, survival in difficult times, learn more, and we will get back to you. Or you can contact us by sending an email, peter@esssbiztools.com.au. And if you've got any questions on any item we've discussed, even if you're watching this webinar in a few days' time, or even at 2 a.m., 3 a.m. of the morning, as some people tell me they do, don't ring me then, thanks, but send me an email and we will get back to you. And if you've got a question for Paul Barnaby on the budgeting and cash flow products and the whole concept of predictive accounting, you can send me the email if you haven't got Paul's contact details, and I will send it on to him. So please stay safe. Start thinking about your cash flow and funding issues for 2020-21 now. Don't wait till October. Unfortunately, it might be too late for some businesses, because I don't think you're going to get a very welcoming embrace from your banker at that stage. Thank you for participating in this webinar or watching it subsequently. Have a great day. And I look forward to talking to you all again next week when we will introduce our next lot of speakers, Andrew Geddes and Anna Gunther. Thank you very much. Have a good day. Bye.